Hello and welcome. It is the 11th day of September 2019. My name is Derek. This is the Money Charts channel where always all bets trades of the like within each his own risk and their own reward. All right, you're watching this video and silver's doing nothing today. I'm going to talk about silver, gold, platinum, and palladium, as well as the ratio of gold to silver as well. Today's session had a high of 18 and a quarter, a low of 17.90. Volatility in at 35 cents, about 2%, but it was even less than that for the most part. Price action remains for day number 3 and entering 4 at the 18 lows. And even you can say another day in here as it entered at September 6th. Then these 3 days of going sideways, and well, we're just starting a new day now. It's 8:12 p.m. Eastern Time as I'm doing this. 18 average of highs extremely flat right now is in at 1853, and the lows microscopically rising. And it's been just a wonderful run with the 18 average of lows so far being that, or the entire band of 18 rather, being great support within the market. On the monthly chart, price action above the 18 average of highs. And I've got some statistics on silver. About almost half the time, price action closes above the 18 highs. It gets 25% gain or better, and 2x, 4x, it's happened a few times before as well. It hasn't done as well lately, though. Well, I'll show you the data. It definitely hasn't been a case where you've seen it, because the last time breaking the 18 average of highs worked out well would have been back in here, and then this break ultimately as well. So in this one, it's gotten above it. This one here was a failed breakout, but I mean, it just went sideways, yada yada. So some statistics. And we'll go back to 1969, and when October came to a close, the price was 195, and that was literally the high. I didn't write what the price went to. Every other one, with the exception of a couple others, I do. I mean, literally, this was nothing that happened afterwards. But on March the 22nd, 72nd, it was at a buck 56, and almost 2 years later, it went to 6 3/4. Later that year, when it broke out in October, it actually lost. It only lost about 20% though. And then July of 1975, later that year, it broke out and it lost a lot more, going down to 383. But then later that year, with the price breaking out about 462, it really did nothing. Which meant it broke out again next year at 485, and it had a pretty decent move with about an 11x gain. Not quite, better than 10 though. $50.50 in January of 1980. But even the first few after that actually worked out for good levels to go higher. Because in 1982 it was about $10, and a few months later it rose to 1467. Then in 1987, 5 years later, it took 5 years for it to get above the 18 average of highs after that, and then 6 years after that again. So from 82 to 93, we can see the primary trend was down, and the price action really would show it here too as well. Although not only by a bit, rate of descent that is. So 630, and then it pretty much come close to doubling, and it did it the next month. So it broke March of 87 at 630. The next month it got up to 1092, which was the high. And then in April 93 it broke 436, had a microscopic small gain that lasted a half a year. And end of December 93, or end of 1993, with 511, the price didn't. It went down after that. A year and a few months later, year and a quarter later, the price goes down to 430. And then in April 95, it was at 573. But again, it pretty much did nothing, where I couldn't find a key high or a low after it. And then in 1996, it lost 97, trying to get out of the bear market. It had to move up to 795, but obviously that ended up being a failed breakout. When 2 years later, it did it again. And then nothing really happened in March of '02, but with the price 19 cents higher at the end of the year, it did do something, because it broke 481 and then it went to 844 a little year and a third later. Year and a quarter. Yeah, year and a third actually. As if either one makes much of a difference. And then a few months after that, when it went down, it broke out at 6.5. and it did better than double, going to 1521, taking almost 2 years to do so. In September 2007, it broke out at 1374, reaching a top of 2135 about a half a year later. May of '09, it had a losing breakout, and this lost in August of '09, which meant the following month it broke out again, this time for a winner, as 3 months later it had a top of 1950. And then on March 2010, breaking out 1753 up to $50, so there was almost a 3x move. And of course, that's a key top. And since then, March 12th, a little bit of a bad move in here, 34.49 falling down to 13.81, as it never really had any real. It didn't stop going down really until that number, which is why I count that point. It got above the 18 average highs in 2016 after that, and that one was a small gain, and the one in 2017 was a loss. So here we are, July. It broke out at 1640, and right now it's had a small gain, not quite 20, about 20%, and not quite even 19 maybe. But that's the history of it. Just some whatever on those mathematics, and let's move on. And we'll just take a quick look at gold as its month, as it leaving the 18. And we're looking for closes above it. So there we see one right here, closing at about or at 293, we'll say. And what did the and it was a gain obviously because it came up to this high, and then I normally in a situation would not count this as the correction move going down. I wouldn't count this as the high, and I thus in that in sense I wouldn't count another re-excitation. But I mean, however you want to look at it, even if you count that, exits it here, takes the high. Exits it really between August and September of '02, it hits this high. Then it exits it again here in May of '03, but it only comes down here, definitely having a good game quickly after the exit in August '03 up to this high. Then it exits again within the bull market, because if it keeps on doing it, then obviously it's in a bull market with the rising 18. So it breaks above it, okay gain. Breaks above it here in '05, tremendous gain. As really, if it doesn't go down to the 18 in here, move all the way up to here. And then when it exited the 18, it did so right in here, January, February of 2009. And well, that was the start of this fantastic move. Then it got above the 18 average of highs again on September of 2012. That one ultimately failed. And then we got above the 18 average of highs here in February 2016. And it made up to a high up to here. And then it got above it here, but it only came down here. So a reattempt here, but then it came down again. But it went down below the 18 average of low. So I do have to count that as, and it really didn't do anything. Then it got above the 18 average of highs in January of this year, and well, so far, so good. Of course, this is a big level. Don't know yet if we're going to find support there yet or not. For me to determine, so the easiest way is to do so, not only for the up move break to the 1675 or so level, is the short-term time frame. And I need to see the evidence upon that. So I'm going to just go right to the daily. And on the short-term time frame, obviously, we are looking at the attempt of reversal of trend, as the price action has had an okay correction, but still it's only a little bit of one as of now. And when you have action coming up to the 18 or any type of lower high in this area, start to see it breaking in between it. It still hasn't corrected it yet, but in that case, when it does and comes back lower, you have to now, at that point, you'd be giving the benefit of the doubt to break this support. But it's got a lot of that empty space, of course, to fill. And whenever we see something like this, the easiest way of saying, okay, for this to get going is I want to see it clearly above the 18 average of high. So that's the easiest one right now. 15.35, your job is done. Just wait and see. And of course, take a look at it on a day-to-day basis just to adjust to what's going on. But if we continue on shortening it out, we got the 8-hour term time frame, which since this low has just been grinding its way lower. So now we see it come up in here. We have an obvious uptrend over the last 5 periods. And if you see any weakness amongst it, leaving this level and then starting a breakdown phase, as it would be down through here, would be giving you good signs, especially if you get a failed Fibonacci of 61.8% from this low to this high. So what I mean by failed Fibonacci, I mean that it retraces well more than 60. Well, it retraces more than 61.8%, and it would be holding and staying below that level. So let's take a look at that on the single-hour term. So I'm not going to calculate it, as this is really short-term stuff. But 1484 to 1500 I was used as a high. The approximate area would be pretty much this low. So if I see any weakness at around 1486, 14 to 1487, even 1488, and at that point there I see it starting to falter lower, I'd be very highly probable that we would have one good leg lower. Which, I mean, they always have good leg lowers and higher. That's what it does. We can see a bunch of good legs lower on this one, as we have the multiple hit one here at 1506. We have a small leg lower here at 1498, which is becoming resistance at a huge level. And of course, we had a big lower level at about this 1486. And because this level of resistance is very big, 1498, of course, is that level. And really getting above 1501, so noticeably above 1500 would be where I would be looking for, okay, this thing should be ready to go, especially around 1504 or so, although you would be hitting this resistance. But no, I wouldn't say that's a big deal because of this resistance test in here. I would be thinking if we can make a clear break above there, we should probably come up to 1522. That is a major long-term level, and they usually reflect themselves short-term. And in this case, most certainly no exception, as we can see how well the support and resistance has played out. Okay, there's your gold analysis. On the ratio end, that's in at 82 and 4/9 approximately. And big move lower, consolidation, big move lower. We're in the consolidation right now, showing weakness and grinding its way within the 18 average of lows for what is now the fourth day. In the session, really for today, or on the September the 11th, a high of 82.92, a low of 81.94. So the volatility is about 1 basis point, or about 1.2, 1.3% ballpark area. And amongst this, it's probably now, I think, unless gold is ready to have a huge, huge breakout higher, and it could, sort of like it did for the rest before earlier in the year, but that's exact kind of what I'm talking about. Unless it can do something like this, I really feel that this is just going to be a mechanism to how the base precious metals, mainly gold and silver, do. In that if they go up, this goes down, and if they go down, this goes up. The silver back to higher volatility, because earlier this year we were seeing spots where, oh, gold is up 1.7% and silver's up 0.35, which reflected a lot of this move higher. But obviously, as we can see in here, the volatility size from this top has been a lot higher on the move higher, meaning the green and red candles up in here are smaller than those candles that have happened since. Let's move on to platinum and palladium. And I watched a video on Mike Maloney, Gold Silver YouTube channel today, which referring to well, why they don't sell platinum and palladium in their bullion store. And I buy from silvergoldbull.ca, being that I'm in Canada, and they do sell very little amount of palladium and platinum, and that's one thing they talked about is the amount of investments in this percentage wise extremely small, which really should come with absolutely no surprise whatsoever. And long story short, I went to go buy the palladium, which I wanted to. I think I wanted to buy an ounce of it. And then I'm looking at my bill and thinking, well, that's more expensive than I thought it would be. But that's because it's the tax in Canada, which is noticeably more than 10%. They call it the harmonized sales tax here. And I'm like, you know what? That's just adding more to the premium fee of like 12% more. It's like, I don't want to buy it, so I canceled the order. As it's basically the other way of saying, yeah, we don't really deem that as money as one point. But also at the same point, if I want to sell palladium, well, it's a lot easier to sell silver and gold than it is palladium and platinum. That should also come with no exception. All right, as far as these charts is concerned, on the daily chart, palladium or platinum with an update, palladium as well, as it's trying to get above the 18 average of highs. Price action failed, which is odd, right? I would have to say maybe it still will. But right now, it has failed to come back down to the previous level of resistance from April and May. Okay. And really, that's the upper end of the range I'd expect it to come down to. which would be 912 down to even around 860 or so. Again, it can still find resistance or lower high it and come back down to that level, but it doesn't have to go there. There's no like written rule that it has to. And if it starts to go up, that could be one way of saying, well, normally in markets, when you have a move like we do, you have low, high, all the up and down lows, this high, this low, and you have this phenomenally extreme up move. That when you have your correction, if you don't come back to where you came from, or even deeper than that, let alone a noticeable large pierce above that 916, because the bottom came in at 928, 929. So it starts to break up higher. That could be one level of saying, okay, I got extreme probability, high probability that it's going to break this resistance and probably make a sweet leg higher thereafter that. And whether that would be a good to work with those parameters in a situation like that, I'm not going to say, but it's something I would definitely think of along the way because again, these markets usually tend to come back to areas like this where we come from, and this is a walk in the park breeze. Walk in the car, you don't do that. But walk in the park breeze. As I move down to here, I mean, that doesn't fill too much of this empty space from the end of May lows and the current highs. As far as any of this on the short term, let me just take a quick look at this. I haven't yet. 3 hour chart is attempting to break this out, it looks like. Barely above this, but over the last 5, 6 periods, a lot of this just consolidating amongst the highs and we'll call it between the closes and the lows. And the closes isn't showed, but it'd be somewhere in the middle. But it looks like within this period that it's trying to break it. Do I get any clarification on this single hour? And in fact, I do. And this is a nice little sweet pattern now that I look at it. And I haven't looked at this time frame at all. I haven't looked at all really at all Palladium either. And that's often what I do with these. Nah, I can't say often. Half the time. I mean, when you're talking about looking at Bitcoin per day and even silver and gold a lot of times, I can't say that. Although shorter term, maybe. So yeah. But it's very common that I'll just go to a market and I'll actually look at it the first time when I'm doing at it. So it's almost like, anyway, like getting me raw footage or just me just watching me just look at markets for the first time. Okay, so we have this resistance that was first established, previous level of support in here. Why is this thing? Okay. Multiple hit support, but you hit this resistance successfully in here. You attempt to do what you did before, which was hit the upper end of where you were, because this was like consecutive, nice little trend line here. Amazing uptrend for several periods. Of course, it went sideways from this point to, well, 2 periods ago. But you hit this resistance, and then you come down the 18 lows. You hit resistance again, and this huge one, and just technical analysis, all this put together, a lot of it determines where were you coming from, too, and where are you with the 18 highs and lows. But when you have this in reverses like this does, you're in an uptrend, you're trying to break this resistance, you got all this stuff going on. You got to give heavy benefit of the doubt for what just happened and what's probably should still continue to happen, which is continuation higher. And within the last 2 periods, well, this one's halfway through with 29 minutes to go, and the previous one, it's productively holding within it. Now, as far as the fundamental news on it, one of the things about these platinum and palladium is they're very big for catalytic converters, and they're mainly. I mean, most of its actual fundamental uses is for vehicles and cars. And what's not that difficult and easy to predict is the following. Well, what's not as difficult to predict, but I think will happen is the electric vehicles will start to surge, which would in turn reduce the amount of vehicles in general that would be produced. As far as gas ones, yes. Now, what's easy to predict is that you really can't have a major increase in vehicles right now. If anything, given that we are most likely certain to enter recession soon and the economics, the economy's not good. That automobile sales may be on the decline, especially when you consider things, and I don't know how much Cadillac converters would affect this, but like bikes, motorized bicycles of some sort, mopeds, and really not motorcycles because they're just still expensive as well. But the bikes you can get for like 4 figures. I bought one that was way, way too cheap, I think. It wasn't that good a few years back. I think it was like, I don't know, 800 or 700. And I mean, it was garbage. I shouldn't have bought it. But there's a lot of good ones out there, like different things like that. But yeah, a lot of bikes that you can get for like 2, 3 thousand can do a lot of the jobs that people would get out of a regular car and vehicle. Which another reason that they would be going use less fundamentally. Moving on to Palladium. Now I think this one's a wild card because I wouldn't be surprised if there becomes a lot of great uses, like new uses we haven't heard of with it. It's very similar to that of silver. However, one of the big problems will become if silver can do it and palladium does it pretty much just as good, and palladium doesn't count because silver's cheaper. And anyway, with that, I'm looking at the 1 hour time frame. We'll see this the same thing, the same thing here as I just mentioned before. You have the fast move up and the quick move lower like this. And what has happened since? We have two good green candles up to the highs, and how we just been just consolidating like this, and now flirting with the 18 average of highs. Had excitation, although back within the upper end of the 18 band. Definitely a lot of progressive signs that this could continue further. Yeah, and we might even. I wouldn't be surprised what happens next between. And when I look at this chart, between 1568 and it's the same equivalency up, which would be somewhere up here. I wouldn't know what would come next because I wouldn't be surprised if it higher lowed this low at the 18 average of lows, meeting up with this resistance and really more towards this resistance in here. But I feel there'd be an okay chance, a pretty good chance that if it does, that there'd be almost as good of a chance it would reach like say 1580 compared to like say 1560, and there's a much bigger move to go from 68 to 90 than there is like 68 to like 58 or something. But I won't be betting it in any form. And let's take a look at this more long term. 8 hour chart. Well, we're getting back to this previous area in here, which is interesting. Interesting because now you see this market making these nice moves up. You got to be cognizant of the fact that this thing is got to fill some of this empty space, break below the 18 average of lows, and go down somewhere. But we are in that of a bull market, and I don't remember putting this line in, but I might have said break this resistance, it might go fast. If that's the case, it was only luck that it did. Or it wasn't. It's your call. Okay, interesting. Well, I guess it doesn't really matter exactly where the highs and lows are. You have this high, and then you have a matching low, and then you have a low. I mean, this is silver related, man. This is like the silver quarter. This is like the silver long-term chart. It's the exact same mathematical pattern for the most part. And that is, you have a kick-ass move. Okay, that's not too similar. And what silver did is it pretty much came down to like here, based on this low. It had a very good retracement in price. This one, not so much. But regardless of the fact, the pattern is still in, which means you have the high. It's most certainly made a higher low in here. Matching high, most certainly a higher low. This low higher resisting or supporting this area of resistance it congested with. And now it's back to it. It's a cup and handle or inverted, whatever you want to call it. Yeah, it's a cup and handle. I mean, with all these types of patterns, getting above the neckline is what it needs to do. But it does seem poised as if it's ready to do that. I wouldn't be too surprised if it does it pretty soon. And the idea of ending the month of September in an uptrend, especially with what we see on the monthly. Okay. Markets don't always come back to where they came from, but this one did. And they usually do. See, this was where it was. And technically it was also up here. And when it resisted it, it came back down. But as I'm saying, this support came back to this resistance. And then it's gotten above that high. And Well, we expect a nice, clear, concise breakout after the level of a big break like this. No exception here again. You make this high, correct nicely through the 18, and what's happened after this liftoff? Well, we had a pause month, and then a price correct, and then two things happened in this month, the previous one. The first, we had a price correction which matched this little area in here a little bit. Of course, it's all what it is. And then it came back higher again quickly. And that's what happens when you have a move like this. Is, and I know it's not the straightest of drawings, but you know it had to have went down. Basically, a V-shaped formation had to have happened. And in order for that to be the case in one period, it happened fast. It's not like you've seen like a V shape here, for example, like over multiple periods. This is one of the ones that happened fast. And so far in today's session, albeit not much into it, showing some early progressive signs along the way. And the shorter term is showing that too. So there's your analysis for this evening on a market that really didn't do too much today. And yet I still made this almost a half an hour video. I'm doing what I do because that's normal for me. Anyway, thank you for tuning in and have yourself a great day. Bye-bye.